Good afternoon. Happy Hump Day, Wednesday, and thank you for joining our virtual event. My name is Mary Perdomo. I am the event director of the Women's Council of Realtors LA-Beverly Hills Network. And before I introduce today's featured speaker, if you have any questions, can you please put it on the chat and we will conduct Q&A at the end of the presentation. And with no further ado, please help me welcome our featured speaker for the afternoon, Ms. Pepper Hu. She is the president of Hu Farmers Insurance, Pepperdine MBA program graduate with 7 years of experience in insurance coverage such as auto, medical, life, residential, and commercial properties. She has accomplished many awards in her industry. 2021 Commercial Elite Agent Award, top number 1% nationwide production, 2020 and 2021 top 1 production in personal line and commercial line in Farmers District 58, 2020 and 2021 Commercial Cup Award, 2020 4x Triple Down Award. And with no further ado, please help me welcome our featured speaker, Ms. Pepper Hu. Take it away, Ms. Hu.
Hi, thank you, Mary. Thank you for the Women Realtor Council for this opportunity. I'm so excited to share this information with you guys. Right now, let me bring, can I share my screen with my PDFs? I'm sorry. Can you guys see my screen? Okay.
Yes. Yes.
Okay. As we all know, there's a new rule come up, like buyers can only cancel due to inability to obtain insurance during the investigation contingency, not with their loan contingency, which means like the insurance has to be settled down at the very beginning of the whole escrow process, not the very last one. Because I have been heard from my realtor friends recently, like they haven't had any problems with insurance in the past 20 years until recently. The reason is like we have many issues can affect our insurance to be declined at the very last moment. So the escrow has to be canceled or delayed. Our client may lose their deposit or they may get a penalty or somehow, but that's not what I want to happen, right? So today my presentation will be so easy. Why this is happening, why it's hard to obtain the insurance and how to deal with that. But before I give you guys all the solutions, the first conditions for solve all those problems is early. You have to reach out to your insurance agent as early as possible to start a quote or to finalize the insurance at the very beginning, okay? And then those are the 4 reasons that very commonly to got their insurance to be declined: prior loss history, high wildfire, high value homes, high wildfire combining high value homes. Okay, this has happened a lot in Beverly Hills law area. I believe a lot of agents has been suffer for that. The prior losses like a water loss, like a personal property loss, even my stuff, my luxury stuff, my jewelry stuff stolen from the home can consider as a prior loss. High wildfire means like the areas located in the areas really easy to caught on fire. This is happening really obviously since 2017. 2017, there's a large fire caught in Malibu. My school, Pepperdine, was burned really seriously. And then from there, from 2017, California has been burned down every year until recently, all the way from the west to the east part. Last year, my area, Chino Hills, Yubalinda, Urban has been burned really bad. So that's why the guideline for the fire zone has been tighter and tighter. And a lot of insurance companies, they're losing money. They have been losing money since 2017. So they are being more conservative to offer insurance for the area. And for high value homes, insurance companies have been seeing really large loss ratios for high value homes because a lot of high value homes, they are custom made. Ever there's a small problem come to the home may cause a large fixed cost. And the insurance company has been lower their guidelines in order to insure smaller homes other than large homes. This can also be a reason that the insurance got declined. Combining high wildfire and high value home, we can tell a lot of high value homes, they are located in the high wildfire location, in the mountain, near the mountain, close to the mountain, right? That's why the value of the home is so high. And those are the reasons that we're having insurance problems. And I'm going to go in more details why and how in the following slides. Okay, for the prior history, loss history, every home, if they ever have 2 claims in the past 5 years, most of insurance company will decline them for the standard market. But farmers is one of the few can accept homes who have two claims in the past, especially for the personal property claim. A lot of insurance company will just decline if you ever have 1 personal property claim. What is personal property claim? Like last week, my client was traveling in Las Vegas, and their package was stolen from the car. They have a Rolex, jewelry, iPhones, and the Louis Vuittons inside a package. We got to claim them for $200,000. We paid them $200,000 for the whole claim. This client cannot go anywhere. They have to stay with me forever because this claim make them have nowhere to go. No insurance company going to accept them. Water claim is super common in nowadays. Our homes is getting ordered, and then the water claims happen more often. We have to make sure the client check their record before they buy the house. If they ever have too many water claims, we need to gather all the documentation to make sure the water claim can be fixed. Otherwise, a lot of insurance companies, they don't like water claims. Quote only without validation, which means for all the type of risk, all the insurance companies, agents, they can provide you the quote for the customer to give it to the loan agent to calculate the loan. However, there's a long way to go before a quote to be a policy. And the policy is the way we can issue an EOI, evidence of insurance. That's what we need at the end of the escrow closing. There's a long way to go in the between. This way is called underwriting. Personalized getting a lot of underwriting stuff right now. Sometimes if we validate the quote, we do an underwriting process, the premium may change, they may increase, which will affect your loan. We all know the insurance is kind of experiencing in the loan process. If the premium goes up, the loan can be reversed all the way. So I always, the reason the insurance got declined at the very last step is the agent didn't do the underwriting at the very beginning. So our clients are facing this problem. And how to fix this? First of all, address check. This is the benefit my office can offer to all of you. If you give me the address, I can really quick pull up the record for the past 5 years from my system. And then this can be done at the very beginning, even when you try to submit an offer. I know during the whole process, the listing agent must disclose all the history of the house to the buyer agent, but that's too late. I can give you everything before you even submit an offer. And then I think that can be a really strong plus to all the buyer agents that you really care the client. Let them know if they want, let them know that loss history before they even want to submit an offer. And then this is a formal record I can give to you. I think this will help the client think about it. If this is the one I want to buy, or if they can prepare, have a heads up, like I may have a high insurance, or I need to spend more time to do insurance if I really buy this house. And I will show you guys later how my system looks like, so you'll see clearly everything. Water detector. For farmers, if we ever have 2 water claims in the 5 years, as long as the client is willing to install a water detector device, we can accept them. We can buy insurance for them. It's actually good for client. They want a water detector to be installed in the home to prevent any future loss. The installation fee is around $6,000 to $1,000, depends on the company. However, compared to what we're paying for a house and what we're paying to ask for fee, $600 or $1,000 doesn't really mean anything, but it's provide ongoing protection for the client. So if the client ever found out 2 claims in a home and they really like it, I'll tell them better get a detector as soon as possible, and then sign up the contract. As long as we have an installation agreement, we can issue the policy for you. Third, high deductible. Farmers allow higher deductible, $5,000, $10,000, if the client is willing to go with a high deductible for the water claim. Even though they have water claim before, we can still insure them. Underwriting review. The good thing about farmers is like we have a real-time underwriting review. It's pretty much like I'm chatting with somebody through Facebook. I can do the chat with my underwriter for some small amount water claims. They can do a review over the phone, on the line with me, not over phone, I'm sorry. Real time on the line and when I'm chatting to them. They can review the policy, let me know, Pepper, this is good to go or not. So it may take a little time, maybe longer than 30 minutes for me to get approval. but the client can get a firm answer if this policy is good to go or not. We don't have to wait until the last day of the loan. And for some large water claims, maybe higher than 20,000 water claims payout, we have to submit as non-bond. Submit as non-bond is like I submit a policy to underwriter, but without pay anything. The underwriter takes 1 or 2 days to get back to me, Pepper, this is good to go or not. It takes longer time, but I gave a client peace of mind. I can go move forward with the other section first. Insurance is all done. And however, higher than 2 claims for water claim, whatever claims, no insurance company is going to accept this house. I'm not sure if buyers still want to buy the house if they have higher than 2 claims in the past 5 years, but if they're still willing to, California FRED plan is their last go-to. Every house in California, they have nowhere to go. California FRED plan, which is a government plan, they have to accept them. Yeah, this is the very last go. But I do have a lot of experience for claim services about California FRED plan. A lot of people, they don't like California FRED plan because they think the claim service is horrible. Yes, it is horrible. They never respond, they never call back, they never email. But the good thing is, it depends on the agent, how many times we rush them, how many times we call them. I have two representatives in my office are hired solely for claim services. I do, like last week, we have a really heavy wind. It's a windy day, right? Really heavy storm all over the place. I have a clients, they have a tree fall down, damage their house, damage their neighbor's house. They have to go through California FRED plan. And then we call the claim adjuster for California plan for them every single day. And then we got a result in 1 week. Usually it takes 1 to 2 months. Just so you know, California is good to go, but depends on which agent you buy from, okay? And then, okay, this is a page from my system, how the claim for the past 5 years will be shown. This address, I see there's a claim in March 2018, March 28, 2019, and it's a theft of premises. This is the example I gave before. The package was stolen from the car. Even though that's a car, but that's towards to our home insurance. Home insurance will cover my personal property no matter where it is. I can wear a ring outside, but if I love the ring, it goes to home insurance. This is the location that we ever have a claim before. However, the good thing is this probably from the prior owner. That's not my personal property. So insurance company has an N here, means like it's not chargeable. But if my client, they ever have a personal property loss with their prior home, but they're buying a new home right now, this loss can be counted as one loss, which is chargeable. This will increase the premium a lot. So the quote is not final. If I see this signal, I will always tell the client, the premium will go up, we better do the underwriting first. Okay. Second, high value homes. The reason like we cannot get insurance for high value homes is because it's out of the appetite. Everybody wants to earn money, right? High value homes obviously have a high premium. Every insurance agent love that, but that's not true. A lot of agents, they're insuring the company, they don't even have the appetite for high value homes. You guys can tell, like I'm representing farmers, but farmers is the only captive agent, captive insurance company allow agents to go anywhere I want if farmers cannot insure them. For State Farm, if they cannot do whatever they do, they have to give up. For all states, they also have limitations on home because they are doing brokerage. And for some brokerage company, they said, I have been representing 20 companies. I always have the option for you to go. That's not the choose. Because before I opened my farmers agency, I have been working as a broker for 5 years. And then I know all the rules for all the companies. A lot of companies, they represent for 20 companies, and all those companies are small amount. They don't insure over than 1 million. Or if the dwelling is over 1 million, it takes a lot of steps to get approved. Dwelling here, we mean it's not the sales price. It is the labor and the material, which is labor and the material is the replacement cost. It doesn't count for, it doesn't count the market value, right? I hope we're all in the same page for the dwelling part. So if the house takes 3 million to rebuild, no matter where the house it is, it takes 3 million to rebuild, then a lot of company will decline it. But farmers, the good thing is we insure up to 3 million. Over 3 million, I have other market for you. Okay, and for the building cost increase, which means nowadays after COVID, labor and material has increased a lot. Usually we call a home for 250 per square footage. That's a good quality of a home. Right now, for all the luxury custom homes, will start at 300 points per square footage for the replacement cost, which lower some insurance companies' appetite from 10,000 square footage to 7,500 square footage. A lot of agents, they're still living in the old days. When they're quoting, they see, oh, it's 7,500 square footage. I can insure them, and I call them. When they go through the underwriting process, they got declined. This is happening. Why the Havala home is declined. And a lot of times we got declined by the loan underwriters for the coverage, because some processor, they just before the case actually go to the loan underwriter, the processor will decline to me. They're saying that the client's loan amount is about how many limit, but how many minutes, like 3 million or something, but your insurance only cover them up to 2 million. Here, a lot of processor, they are misunderstanding the concept of replacement cost and the market value. I will just email back them, tell them we never look at the loan amount to do insurance. We look at the square footage, year built, material, everything. That's how the house looks like to quote insurance. No matter the house is in Beverly Hills, or it is in Malibu, or it is in Ventura, the market price can be different, but the replacement cost for the same year built, same square footage, same quality, the replacement cost is the same. It's just because it's in a different area, the market value is different. So loan amount is the market value. It's not replacement cost. What we'll try to negotiate with the loan companies to get approved. Sometimes it's just simply because this reason. And then a lot of times it's a large investment properties. Insurance company doesn't like that, because people buy large homes to live for themselves. But if they buy large investment properties, it's hard for them to get a large lease all the time, long-term lease. So insurance company decline them, or a lot of people that buy large investment property just for value goes up. They may be vacant for a long time, and this is a major concern for insurance company decline them. Okay. So how to deal with this? Within 1 million dwelling, we can issue with the same day. No photo need, no inspection in advance. We just approve right away. If the house replacement cost is between 1 million to 3 million, but the square footage is lower than 10,000 square footage, we need 1 day for underwriting approval. And we need photos for 4 photos of interior, living room, kitchen, master room, dining room, 4 photos of exterior. So I prefer, even though house is not us yet, but we will need the realtors to help with us, work with us to get photos, so we can get approved to get insurance settled before going to the very end. If the house is over 3 million to 20 million, we need 1 week underwriter at least. I know sometimes the escrow can be just 30 days or even 20 days, but keep that in mind. If that's a high value home, we're going to submit offer. Don't put it 2 short days, because the insurance may eat your time for about 2 or 3 weeks, right? So 1 week underwriting review at least, and then we need appraisal report. For high value homes, even though that's a cash deal, we probably don't go through the loan agents. We still need appraisal report. This is required for all the insurance company. And the third, central alarm certificate. A lot of high value homes, they build in with central alarm. However, it is not activated. We can issue the policy at the first for the escrow closing, but within 20 days of the escrow closing, they must activate a central alarm and then submit the proof to us. Having the alarm is not enough to get approved for the home insurance. They have to activate it. We need to see the certificate in order to get it approved. And all the high value homes, they will not just having an exterior inspection. Even though we send out the photos, the interior inspection is still required. and the dwelling can be changed and rate can be changed after escrow closing, because the interior inspection is done after escrow closing, and then the insurance company will going to know details of the inside. Because as an agent, when we're quoting, we can only get details from online photos. This is not sufficient. When the insurance inspection actually done, they will get more details to revise the house detail to make sure we're insured it properly. So the client may be prepared for the change, but that's after the escrow closing. This one is high wildfire. A lot of high wildfire clients, they think they can get the insurance with no problem because the prior owner has the insurance with no problem. However, the prior owner maybe owned this house for a decade, and then the insurance has been grandfathers. Some insurance company, when they change the guideline, it doesn't affect the existing policy, but it will affect the new policy. So the prior owner has a good insurance or easy insurance. It doesn't mean a new buyer can have the easy insurance. The second, some clients, they change the prior owners may be easy to get insurance because they use this as a primary home. But when we're buying this for investment property, the insurance company have a tighter guideline for investment property. Usually like a fire line score under 3 for primary home, we're okay to insure. But if that's turned to an investment property, we have to have the fire line score under 2. That's why a lot of clients still, they are getting a good insurance information from the prior owner, but they got declined after because they are using this as an investment property. A lot of clients, they don't want to get insurance, or they're not comfortable to get insurance because they only want to combine all the loss in one policy. What does that mean? As I mentioned before, all the house cannot get insurance. They have to go through California Fair Plan, which is a government fair plan. It only covers fire, lightning, vandalism, and the wind. We have to do another companion policy to cover water and the liability in a separate policy company. So they have to combine 2 policies together. They don't feel comfortable. They say, why I'm doing this? When I'm like paying 2 insurance for buying a house, why other of my friends, they're only paying 1 insurance? I have been seeing this case a lot. The client has been shopping insurance a lot and during the escrow process. Usually at this time, I'll tell them how good my claim service is. You don't have to worry. Even though that's a government plan, that's still insurance. No need to worry. And the client sometimes think this is doing upside down. They're buying a house. They're not buying insurance. Insurance is just a tool for them to buy the house. But they're blocking themselves to get a house because they cannot get insurance. That's not right. Compared to the house, compared to my value to having no home, insurance is nothing. The client, I know, I'm not sure if any of you have this experience, but I have been seeing clients being bothered for the high insurance premium for not buying a house. The insurance is just a couple $1,000, but a house is like maybe $1 million. It means nothing to think too much in the insurance section for when we're buying a house. So this is a part maybe we need to work together to educate the client. Just accept whatever it is. This is California. You're gonna live there, you're gonna buy separate policies. That's the truth, okay? And then the last one, I'm saying rely on one agent who does not know the home market. Even though I'm promoting myself a lot as a farmer's agent, as an experienced agent, but I'm telling you, farmers cannot buy all the houses. That's not true. And farmers cannot do all the houses. State Farm cannot do all the houses. There's not an insurance company all over California. They can say, okay, I insure all the houses. I give you all the information, solutions. No, that's not true. I'm telling you, farmers has the appetite, has the limitation. So does State Farm, so does Safeco, Mercury, all the insurance companies. But the thing is, you have to know an agent who knows how the market, which is somebody like me, okay? Because I working for different broker companies. I know the appetite for different broker company. I gather a resource group myself. So if the client comes to me, I know if farmers can write it, State Farm can write it, Allstate can write it. I know where to go to get your best coverage. And then I follow the guidelines strictly. Instead of keeping, sometimes instead of you to keep like 5 resources for different insurance agency and then different insurance brokers, You just come to me as a one-stop shop, I know where to go. If this is the market for State Farm, I'll give to my State Farm partner to make sure your escrow goes smoothly. Because I have the vision. I'm not the agent like trying to get everything go business. I'm the agent trying to help you guys move through smoothly for all the escrow. Like realtors, agents benefit and clients benefits goes the first for me. I'm not here just to earn every cases. That's why I refer a lot out for my partners to make sure the escrow cannot be blocked by the insurance. Like the solution I mentioned, there's not a shortcut for you to get insurance from all the market, but only Pepper Avenue. I'm the one-stop shop for you, for all the insurance companies. I'll refer my trusted partner to make sure all the house can be covered for high wildfire. And then last, like we mentioned, California Fair Plan. This is the last option for client to go. And we need to cooperate together to educate the client. We live in California, buy whatever we can buy in order to buy the house. Okay, this is the hardest one. High wildfire combining high volume. The reason, like I mentioned before, California Fair Plan is my last to go for other houses for high wildfire, but this is not true for high volume home. Because California Fair Plan, they only insure up to 3 million for combined units, which means my building, dwelling, my personal property, my separate structure, my loss of use, my building ordinance and law, all of them combining has to up to 3 million. It's very, very limited. I have been insuring house has a dwelling limit over 20 million, 11 million in Beverly Hills. That's incredible. California Fair Plan cannot do this. They have no way to insure this type of houses. So we have to find somewhere else. There are some large insurance company all over the world. They're insuring high value homes with high wildfire. They are large entities. So their process take longer, at least 2 weeks. We have to submit to them. The underwriter will look case by case. They look at the map, they look at the neighbors, they look like in this area, how many homes have been insured, what's my loss ratio here? If this home, I have insured a home 2 square footage away from the other home you're submitting, I will decline you, even though this is area alike. But if they burn together, my company will be gone if I insure those 2 houses together. So this is complicated for high value homes. They got coverage. Thus, the underwriter will really look into every single cases, every single house. And appraisal report, like I mentioned before, this is required. Central alarm certificate, this is required. And on-site inspection during the escrow will be required. And it depends on insurance company's speed. Usually, I'm telling you, I've recently read a house for 10 million dwelling. It takes me over a month to get an underwriting review for the inspection. Just be prepared if the wildfire, high volume home, it takes a really long time, even in 45 days to get an insurance approved. So if we're going to ask for this, we may want to ask a longer time. The reason is insurance inspection. Usually we do inspection after the policy is effective or after escrow closing. But for high value home combining high wildfire, we do inspection before we issue the policy. And then there's another way, sorry about that. There's another way for client to get a wider coverage is to use the LLC to own the home. If the client's using LLC own the home, not an individual name, I can try to place them a commercial line just because the owner is an LLC. Commercial line has a wider acceptance because the commercial companies, they usually larger company, they have a different type of loss ratio and loss reserve to look at the risk. If the client is having a loan buying the house, they have nowhere to go. All the insurance company have to shop for them, has declined. Before they go to California Fair Plan, they have a mortgage forced insurance, which means if we have a loan and we'll forget to pay insurance, the loan bank will buy insurance for us, right? Automatically, if they don't receive the insurance information. And that's maybe 2 or 3 times premium higher than the regular insurance, but that's covered. They don't ask for fire information. They don't ask for value information. They don't care where the house is located. They just buy for you. However, most of the mortgage forced insurance, they cover you up to 5 million. So if the house is over 5 million, they're underinsured, but the client has no choice. This is how California is working. Insurance company, they're also businessmen. They want to insure the risk they can accept. If they don't like it, they just decline it. It's like a mortgage. They have to buy insurance for, they have to offer insurance for their loan clients. Then they limited their offer. 5 million is usually the maximum limit that mortgage first insurance can go, but it's better than nothing. Okay, if the house has a 10 million dwelling, at least I'm covered for half of the house. Okay, but if the client's a cash deal, they don't even have a mortgage insurance to go with, then California Fair Plan is the last option. California Fair Plan must cover all the houses in California when they cannot find a coverage, but the house is absolutely underinsured. The client has to prepare for that. When the house burned down, they probably only got paid back for about 2 million or 3 million, but it's still better than nothing. This is the very last option. But if that's a cash deal with California Fair Plan, it's not going to block you through for the escrow deal because we don't have a loan here. But it's still giving an option to the client. Even though they're a cash deal, they still want to get some sort of coverage. Even though they only cover for 2 or 3 million, but insurance is exchange of value. We got paid for 2 or 3 million for coverage, but the premium is only a couple $1,000. We still pay less than we may face the losses, right? Okay, I think I'm done. Please shoot me all the questions if you ever have.
Okay, and if you want to stop sharing the screen, and we will bring our Marissa, our membership chair, to conduct our Q&A. So, Marissa.
Hello, everybody, and thank you so much, Pepper, for your very informative presentation. It's greatly appreciated. We do have some questions that have been posted throughout while you've been speaking, so I am going to start with just the first question that we have for you. And so the first question for Pepper is, farmers insurance is usually quite expensive. How would you make yourself competitive to other insurance companies?
Yeah, thank you for the question. I have been asked all the time for this type of questions. So first of all, I never sell on price. Because insurance, the price, I can always beat the price if I change the coverage. But the coverage can be, if change the coverage is not good for customers. And then we have, every time we get a quote or evidence of insurance, it's just a piece of paper. The actual policy is a full range of policy up to 80 pages. When we look at the 80 pages, there are many details. Farmers is the only insurance company located in California, headquartered in California. So our claim adjusters go anywhere in California within the same day. The claim process, the service is so different. And then I have been working with different insurance companies as a brokerage, over 20 different insurance companies, but I stay with Farmers because I have the best claim services in Farmers insurance. They are pretty much treat me as a family. I have a client, they go to a Farmers, guarantee the vendor to fix their car. But the vendor didn't confirm with the client before they go ahead and fix and bill the client for $400. I just called the Farmers claim department and they forced the vendor to return the money to the client, still fix the car. This is the only thing that can only happen in Farmers. And especially when the fire is coming, we offer different services. Like the year before, Irvine, I don't know if you guys know Irvine. Irvine is areas in the urban area, but it caught on fire. When I called the client was calling me, Irvine got on fire. I was like, where? Irvine, where's the fire? However, there's not a house was burned down during that fire, but a lot of people has mandatorily evacuated from their home because of risk. In this case, Farmers is the only company pay out the hotel expense other than other companies, because our loss of use coverage has no deductible. Everybody has loss of use, but they never tell the client they have deductible for that. Deductible is usually $2,500. How can I spend $2,500 within 2 days living in a hotel reasonably? But the Farmers pay them from the $1. And then they got to pay for $600, $700 within the same day, pretty much cover their expense for the whole year premium. And it will not increase their premium because it's not client's fault. We pay a lot of payout like that. So tiny difference in different insurance companies, but we never sell on price. We sell on service and the knowledges.
Nice. Thank you for that answer. And my next question that came up is, I think you just covered it, but you mentioned a few times about your claim service. And someone wanted to know if you could give us an example of how you've handled claims. We just heard one great example. Do you want to give us another one or?
Yeah, obviously, absolutely. Because our office handled 364 claims last year. How many days in a year? 365, right? So we're doing claims every day. And then I know, because I have a really niche market for doing insurance. I like people who are busy, like realtors, like rich men's, businessmen. I don't want to waste their time to do insurance. I tell them, give me everything. I submit the claim for you. We follow up for you. We update you. Every time you ask me, Pepper, what's my status? Give me 10 minutes. I'll update you. You don't have to call the claim adjuster all the time. Our claim adjuster can receive text. You can text them. So we know how hard to get people on the phone when there's a voice message. I don't know who invent this voicemail system. It's hard. When I see voicemail, I feel sad. But we can text them. Text is easier even when we're on the phone, we can reply text, which means the claim communication rate faster and smoother. And one thing I do want to mention, because this is something I actually want to share with you guys in my screen, if you're allowed. Yeah, okay, let me show you guys this. And this is the email I've been back to the client for their door loss. They have a really luxury, and then they have a really luxury door, but that got damaged by the tree. And then the client was speaking the normal language, daily language. Claim adjuster was speaking a professional language. They keep misunderstanding each other. They got a fight over the phone. So I talked to each other and understand the claim adjuster, use a daily language to explain to the client like this. This is what I'm doing every day. And the client was super, super happy with our services. They got to understand, they appreciate. So this is my work doing how to claim services. I believe there are agents who value client to provide claim services, but many of the agents, when the client have a claim, they just give you a phone number. Call this number, talk to the claim adjuster. That's not my job, but that's not all I'm doing. We cover the client from beginning to the end.
Nice. So it's that full value package that you offer for the client. Mm-hmm. So nice. Okay. Next question. I have experienced a few times that insurance rate change when we are trying to fund. What do you do to avoid this from happening for your clients?
Yes, this is very important, like we mentioned before, but I would like to mention again about the underwriting process. Like a couple of years ago, before 2017, personal line insurance is super simple. Everything was done by system, just come and go. But because of fire and the different type of water claims, the underwriting process got really, really, really strict. We hire a lot of underwriters just to audit every single home. That's why the underwriting process has been occupied so many times, and then also change the rate for our insurance. So what are my recommendations? Like every time when you got insurance, no matter from which company, have them do the underwriting at the very beginning. When the client said, I like the quote, I approve the quote. Okay, do the underwriting. So we can give the loan agent the final amount first. Then the loan agent can start to calculate the loan without having any surprise at the end.
That's great advice, Pepper. Mm-hmm. Thank you. That's really good advice, especially in our markets today. All right. I have another question that just popped up. It says, hi, Pepper. What is your experience with construction, SFR versus multifamily?
That's actually my expertise. Going to the construction, it will go for commercial line. Okay. Construction, if the client have a loan, the loan bank will require them to buy we call construction insurance, but the insurance field, we call it builder's risk and the general liability. Builder's risk covers the labor and the material. It goes to single family, it's very easy to get a quote if we're doing a ground up. Insurance, like everything, start from the ground. But if you were doing in addition, it's a little bit harder to get coverage. But I still have the market. However, it's always better to get insurance before you start a project. If the project is a 10%, 20% started, the insurance premium will go 4 times up compared to get everything started. Compared to the multifamilies, it's usually larger and they hire larger contractors. They have many subcontractors that there to doing the work. And there's another policy called wrap up. A lot of contractor developer will we're willing to buy, because when we're building a multifamily and we sell to others, within this 10 years, all the unit owners can come back to sue us. But at that time, 10 years, I probably cannot find my general contractor or even a subcontractor. I don't know where they go, but they will still come to me as the developer. The wrap-up policy will cover me the whole process of building and extended the coverage to another 10 years. Whenever the client the unit owner come back to sue me for any problem, it will cover. For example, I just have it recently. I have a new construction home, the fire sprinkler have a water leak. We all know the fire sprinkler's water doesn't connect to the regular home pipe. Even though we turn off the pipe, the water sprinkler was still going, the fire sprinkler was going on. Where only the fire department can turn it off. The house has been damaged. The whole hardwood floor is damaged. It costs about $100,000 to fix the hardwood. Obviously, the insurance company, the homeowner does not want to claim his own insurance because it's not his fault. They claim builder's insurance. My wrap up just step in to cover this claim. That's why wrap up is so important. We think the new construction can have no problem. No, new construction can also have problem, which cause the builder to lose. And my wrap up policy is really competitive. I recently have a builder, actually last year, have a 12-unit luxury condo in Monrovia. They got a wrap up quote from other company for $200,000 premium. And my premium was $70,000 with better coverage, longer building time. It's called wrap up policy. I hope this answered the question to David, right? It's David Norman.
Yes, that was David. Did that answer your question, David? I think so. And while we're on that path, if there's anyone that's on the call right now that wants to ask a question directly, thank you, David. David said thank you. That wants to ask a question directly to Pepper, please raise your virtual hand and come off mute, and you're more than welcome to ask that question. While we wait for that, I do have another question for you, Ms. Pepper. Can your company bill escrow and the premium paid at the close of escrow?
Yes. Most of the time, I'll say 90% of the time, the premiums billing to escrow, and escrow pay us after escrow close. So the client doesn't have to pay when they decide to go with insurance. And there's a one trick thing: the escrow date can change, right? Sometimes most of the insurance company, when they issue evidence insurance to the escrow, they have to activate the policy. However, if we move faster, they said, okay, can we move 1 day back? Other insurance company, they have to cancel and rewrite and bill it again. But for my company, we just simply change the day, issue the evidence of insurance to the client or to the escrow. It's really fast, 5 minutes. But compared to other company, probably 1 hour. And then the client may also feel sometimes the escrow, like say, my escrow is going to close on February 15th, but to make everything safe or secure, the escrow may ask the insurance company to make the policy effective on February 1st to give 15 days for escrow to go move forward. Because before the funding, I want the insurance to be ready with no problem. Insurance effective date can only be earlier than the escrow close date, not later. When the client find out they're not happy, why I'm paying 15 days more? But we offer this option to the client. Even though escrow delayed, we can still change the effective date. The client doesn't have to pay extra days. That's the flexibility we can offer to the client.
Nice. So that extra service, that extra specialty that you do for them. Okay, I think I have one more question here. Well, there's actually two. How do you know if a property has a grandfather plan?
When I say grandfather's plan, they have to have a policy deck page from a prior owner. Once I say the coverage, I will know it. And then to be honest, for some zip code cities, and then they tell me what company they're from, I'll already know if that's a grandfather's plan or not. If they're telling me there was farmers in Chino Hills and they can insure us no problem, I'm telling them that's grandfather's plan. And if the client, they're buying a house for rental property from rental property coverage for State Farm, and but they can still do it, no, that's a grandfather's plan. Look, because State Farm has a strict policy for rental properties. They don't insure any rental home anymore. You have to have their primary home with State Farm over 3 years in order for them to have a landlord policy. So there's a lot of tricks. Just usually when I see the city, when I have the address, when I know what company they're from, I will know if that's a grandfather's plan or not.
Okay, sounds good based on your experience. All right, and then the very last question is appraisal is needed even if it is a cash offer. What if the appraised value is under the purchase price? How does that affect the buyer in the insurance process?
Okay, so the appraisal report only required when there's a high value home. The insurance company wants to see the appraisal report just to make sure what's the value we should put in there. And then just to make sure all the details inside the home is correct before we can actually go into the home. That's the reason we need an appraisal report. Just for high value homes, keep that in mind. If that's a regular home, it's not over like 7,500 square footage, we don't really need an appraisal report. If the appraised value is lower than purchase value, that's not going to affect the premium, because insurance company, rather than to insure lower value other than higher value. Doesn't make sense. That's the logic in insurance.
Right. Makes total sense. Got it. All righty. And that is the list of questions that I have from all of our participants and guests today. Is there any more questions out there before we turn it over to our breakout rooms?
I actually see one in the
Okay, see
screen.
another one.
Yes, someone was asking me if I can explain the coverage for California Fair Plan.
Yes. Can you please
Yes.
explain the coverage for California Fair Plan?
Yes, sorry, I really love to talk a lot in insurance. Yeah, if I'm start to talk, you cannot stop me in my field. Okay. For California Fair Plan is pretty much offered for the houses in California when they cannot find a coverage. Like they only cover certain cost of loss. We all know in the insurance that page, we cover building, cover personal properties, cover my loss of use. We have a lot of coverage for my property if they ever be damaged. However, there were many costs of loss to cause a damage to my property. What is the cover the cost of loss? Fire, light, vandalism, wind, theft, water, and the liability. And a lot of companies, they like this risk, they cover this risk, but they don't cover that risk. Fire is the major problem in California. That's why a lot of insurance companies saying, hey, I love this, I love to insure you, but I don't like the fire risk. You have to go with California Fair Plan for the fire, lightning, vandalism, and the wind. Other than that, I'm covering you. Water and the liability will cover under companion policy. But a lot of agents before, because California Fair Plan can have a cheaper coverage, cheaper insurance, they love to offer California Fair Plan instead of other insurance companies just to acquire the client. But this is not allowed anymore. If that's a regular area without the wildfire risk, we have to put them into regular company, even though the California Fair Plan may be cheaper. But keep in mind, California Fair Plan's coverage is very limited. It's not a comprehensive policy. We have to insure them with other companion policy to make a policy as a whole.
Got it. Got it. Did I see another hand go up for a question? Okay.
Earthquake.
Is there? What about earthquake and fair plan?
Fair plan is only for fire. All the earthquake has to be insured differently through California Earthquake Authority. That's also a government plan. All the insurance companies are using California Earthquake Authority to buy earthquake insurance. It can be buy separately. It doesn't have any limitation on earthquake plans. All the area can buy earthquake except Northridge, because I remember Northridge has really severe earthquake damage before. But we still, nowadays company are being not that strict for earthquake. we still can find coverage for them. But if come to commercial, it's kind of difficult. If we have a building higher, a family higher than 4 units, it has to be commercial unit. I know a lot of loan bank that require earthquake coverage for higher than 4 units buildings. Then that's a different story though.
Okay, got it. Awesome. Well, thank you again, Ms. Pepper, for your knowledge, your wealth of information.